Hello, and welcome to The Exit presented by Flippa. This is a 30-minute podcast featuring amazing entrepreneurs who have been there and they have done it. The Exit talks to operators who have bought and sold businesses of all different sizes. You learn how they did it, why they did it, and get exposure to the world of exits. It's a world occupied by a small few, but accessible to many. And on this episode, I sit down with Joseph Fung. He's a fantastic entrepreneur who started a business called Tribe HR, and it was acquired by NetSuite for $32 million. He talks about hiring a team, going from 7 people up to 25 people, and going through this acquisition with NetSuite with a lot of really interesting knowledge nuggets that he drops on us. He talks about how a person on his board had a personal relationship with the CFO at NetSuite. They had a back channel conversation coming, and they did a great job, or Joseph does a great job of walking through the timeline of how things happened. I was really impressed at how detailed he gets. Overall, it was basically within a year this acquisition took place, and Tribe was a social human resources software. So it was very, very, innovative in terms of allowing people to feel like it was almost like a social networking software piece. And he does a good job of breaking it down. So without further ado, let's jump right into my interview here with Joseph Fung, the CEO of his new project, Uvaro. All right, guys, today I am joined by Joseph Fung, the founder and CEO of Uvaro. How's it going, Joseph?
Really good, Steve. Thanks for having me here. This is going to be a fun chat.
Yeah, I'm excited. So before we get into the exit that you went through, let's
Mhm.
dig a little bit into your background and what led you to starting businesses.
Oh, for sure. So, computer engineering by training, got deep into software really quickly, ran a couple of startups. I think what got me into it was seeing what my parents are doing, running their own companies. What got me into the specific companies was a desire to build better companies. Did a bunch of web development, some contract software, but everything I've been doing from a B2B perspective has been helping entrepreneurs do better at launching a company. And that was true for Tribe, and it's true for Uvaro too.
Nice. So let's talk a little bit about Tribe. How did you get started? Did you have a co-founder,
Mhm.
raise money, and how did you kick things off?
It was a fun mix. There was 3 of us who really got the idea going, and we quickly brought in 4 others. So that kind of really inner circle. There was 3 of us, but the real founders, everyone who had that title, there were 7 of us. So kind of big,
Wow.
bit of a party journey. The real gestation, the idea from it was how painful HR software and the HR process was with my previous companies. My employees would come to me, they'd say, "How much vacation time do I have left?" And I'd crank open QuickBooks and say, "You have $280," whatever the heck that means. And so we wanted to build something that was a lot better for the employee. And so we really, at the time, it was social everything. So we called it social HR. But the idea was make something that feels less like a secret government file and more like your Facebook profile. You're choosing what you share, how you engage with others, and have more control over your journey. And yeah, it really struck a chord at the right time. So it was a lot of fun.
Nice. So 7 people, that core kind of team that you took and ran with it. Did you guys go through a fundraising round, and how did you eventually kind of come to the acquiring company?
Yeah. So when we first founded the company, it was a strong, like a lot of entrepreneurs, you want to learn new things, and I'm sure you saw the same things with your company. And for us, our North Star was how far can we go spending nothing. And so we'd buy occasional pizzas. I had a web server left over from my last company, so we were running that. Um, by the time we did raise an angel round with some incredible investors, but it was like $1 million, and up until then, our total expenditure had been like 10 grand, and
Wow.
8 of it was when we got everyone to cash in some vacation time, and we took them to Niagara Falls for a 2-week hackathon. Uh, but other than that, we'd spent almost nothing. But we raised $1 million in seed. We did kind of a seed to another 2.5 million, and then we ended up selling the company to NetSuite, and the exit was 32 million all in. So it was pretty good journey. Not a massive exit, but if we look at the numbers and the multiples, everybody exited pretty happy.
Excellent. And from those first 7, when you started, I really like learning about growing teams because I find that that is very much like a a linchpin for a lot of founders is figuring out, all right, how quickly should I hire? How many people should I hire? Who should I hire first? And finding good talent and people that are a good culture fit and all that all baked into running a company on top of it. So you started with 7. How big was the team by the time you guys exited?
And when we exited, we were about 25.
Okay.
I mean, I'd have to go back to get the exact number, but it was like 23, 25, somewhere in there, split between 2 locations. We had a Canadian headquarters in Waterloo. That's where engineering, product, where I was. And we had a sales and marketing team out of Boston. And so, yeah, we took it to about 25 by the time that we sold.
Nice, nice.
Yeah.
So what was the deal like? Did you guys have to stay there? Was it an earn out structure? Did you have to stay at NetSuite for a certain time? Did people from the team leave or did they stay at the company?
Yeah, the fundamentals of the deal were incredibly founder friendly and entrepreneur friendly. And I gotta give credit to the NetSuite team. I mean, the founding team there, the CTO, the chair of the board, was the founder of the company, Evan Goldberg. Um, they did some things that I'd really put in my short list of things that I'll do when I'm acquiring companies. So uh, first thing, we accelerated everybody's options. So every employee, even the one who was there for 2 weeks before we closed the deal, got all of their equity accelerated, and that was really good. That combined with no earnout. I mean, there's like always that small holdback just to make sure taxes were filed right, but no earnout effectively meant that everybody kind of got that get out of Dodge money. You know, if they wanted to take off, they could, and it meant that NetSuite as an acquirer was really well aligned to give us control, autonomy, create an environment that we really wanted to stay on. We did do additional, stock grants for employees and founders because NetSuite does that for all employees as well. But it was really good. And at the end, even without any kind of golden handcuffs or anything, a lot of the team stayed on. I stayed on for 3.5 years, and we built out their mid-market team for the same product. So at the time I left, my org was about 180 people altogether. So yeah, really exciting growth locally and internationally for the team. It was a really good time.
Wow, that's fantastic. I like that speeding up, leading up to the acquisition. That's fantastic.
Mhm.
And that was NetSuite that really wanted that to happen, or they just allowed that to have happen.
Yeah, in all honesty, it's something I would have asked for, and it's something that they suggested, so I didn't even have to. Uh,
Cool.
I mean, candidly, it probably worked better for them. It probably would have worked better for them if they didn't offer it, because then they could have given it as a negotiating point. But they put a lot of really good cards on the table and brought a very compelling offer right out of the gate.
Very cool. Very cool. So you built this team, you scale it up to 25 people. And what types of things for all the people out there that are listening with a team of 25 people, what were you tracking? I think that learning about, key performance indicators that lead into an acquisition, a lot of people, obviously there's a lot of different businesses out there, so everybody has different things that they're tracking. But what would you say universally would be something that you'd recommend people track leading up to something like a NetSuite acquisition?
So it's such a good question because I'm sure, like you, as you were selling yours, we spent a lot of time uh, kind of angsting over if we were measuring the right things and doing the right things.
Mhm.
Uh, and like a lot of the people who are listening in, we tracked a lot of the basics and fundamentals, like net new MRR, how you're growing, what are your expansion trajectories, what's the adoption of different features, all of that. I think what helped us out really, really well was before we even got into any kind of acquisition cycle, we started tracking a number of things that we thought we might care about in the future. That turns out were really of interest to the acquirers as well. So we started tracking things like the industries of our clients a lot more. Um, Everything we did was self-service, all inbound, and it's really easy to do that without rigorous tracking of things like geography, company size. Someone can fill out our credit card information details, and you never get a real address or a real phone number because they put it in and Stripe is sending you money. We spent a lot of time making sure that our client information was really tracked. So internally, one of our KPIs was a percentage completeness of all of our customer data. And when we got to the actual acquisition process, that made things a lot easier. in terms of having robust data there. The same thing applied with all of our usage metrics. Uh, Now there's a lot of tools out there that you can easily plug in and instrument your application. Um, at the time, it wasn't quite as common, and we put a lot of energy to really deeply instrumenting it so we could help the buyer feel really comfortable about, we had visibility, clear visibility into how people are using the application. Um, and both of those, what that tells me is what we did then are table stakes. So what we're trying to do now is thinking even further. What are the customer insights, the usage insights that we need to have that someone's going to care about if we ever sell again?
Mm, yeah, I like that kind of looking at what they're going to be looking at in the future.
Mm.
That's smart, backing into it, reverse engineering it. I like that. So with timing, there's always a different time. There's always a different kind of what makes sense for founders out there. But for you, when it came to timing with Tribe, what was it that initially, was a light bulb in all of you guys as the founding team that said, "All right, it's time to sell the business"?
Um, yeah, it's really funny because the way I look at it now is a little bit different than the way it felt then. Um, at the time, it felt like this panicky surprise.
Mhm.
It's like, oh my goodness, this offer and this conversation is really happening. Like, what do we do? Oh my god, oh my god, oh my god. Like, it did feel really panicky. Um, but now having a bit of distance at it, I look back and I can actually better remember conversations we had early on. So really early on, we talked about things like how do we act like a publicly traded company so that if we ever IPO, that'll be easier. What can we do now that will make it easier if someone ever needs to acquire us? And so we had those conversations early, and I think because we had them early, when the opportunity arose, we could move and react very swiftly. It felt panicky in the moment, but I think we probably would have squandered the opportunity if we weren't ready. Um, to get to your question, though, the actual trigger, I remember really clearly. We got to know NetSuite as partners really early on, and in one of our conversations, my head of sales and marketing, my CRO, he was a much more experienced executive than I. We're talking to our counterpart at NetSuite, and I have no idea to this day what he clued into, but something in the language, the tone of voice, uh, got Mark to interrupt the conversation. He was like, "Hey, Eric, just a side question. Uh, you guys aren't running a process now, are you? Because if you are, we don't want to get left out." And I mean, my immediate reaction was like, "Mark, what the hell are you doing? You're derailing the conversation. What's going on?" And Eric's immediate reaction was like, "Oh my, I'm so glad you asked and you brought it up because I couldn't really do that, but yeah, we are." And the reality is, NetSuite knew that they either needed to build, buy, or partner
Mhm.
to go forward. And while we were having tons of success as a partner, they were running a process to figure out if they wanted to buy someone. And so that's what got folded us into the process. We didn't really want to sell then, but we didn't want to lose the partnership. So we kind of rode along and then eventually ended up getting an offer that we didn't expect.
Nice. And I love that narrative of that either a customer or a partner of a business eventually becomes the acquiring company, because
Mm-hmm.
there's so much synergy there in terms of like aligned, the same market, the same type of customers. Everybody kind of feels that they're going towards a similar mission, and it just makes so much sense to go across the table and build buy or yeah, I love that. And even the word acquisition, I remember just when it was mentioned, it always felt surreal,
Mm-hmm.
just because as a scrappy entrepreneur, you guys were spent under 10 grand, and eight of it was on a vacation, which is
Yeah.
hilarious that you guys were scrappy. So just having that conversation alone, is very surreal, right? I mean, having.
So it was so bizarre. Like I mentioned earlier, attracting the customers. So we knew what our customer base was, and we knew where it was similar and where it was different from NetSuite's. And I mean, the reality is one of those Venn diagrams where the overlap is, a couple of pixels. It is, and it really helped us really quickly, kind of figure out what do they hope to accomplish, what do they hope to see. It's like, oh, okay, they don't want to come, they don't want to get more of our customers. They want to bring our tech to their customers, and Yeah, it was very, very surreal because like our average deal size at the time was like, I think it was what, $3,000 a year. It was like a $3,000 ACV.
Mhm.
Uh, but their average deal size at the time had just crossed 100,000. So we're looking at it thinking, wow, this is nuts. We're probably not the right fit. We don't want to lose all the referral business. And so we kept participating. And as we learned more about them, and I think they learned more about us, we realized it really was actually the right fit. So it
Yeah.
was very friendly process altogether.
Yeah. And the timeline in terms of the moment that you guys had that meeting and your CRO kind of broached the subject all the way through to the the closing or the release.
Yeah.
What was that timeline?
So that conversation happened, it was about mid late February. And uh, we really quickly got folded into some conversations. And by, I think it was beginning of May, first week of May, we agreed to part as friends. It's like we'd done a number of presentations. We talked to them. We knew that they were looking at about 70 different companies, and they had a history of buying companies for 1 to 2 times revenue. And at that time, 1 to 2 times revenue was, I mean, significantly less than even we'd raised because we were early stage. We had very little revenue.
Mhm.
Uh, and so within quickly a couple of months, we said, hey, this probably isn't going to work out. That's all right. We'll change directions. We were beginning our Series A at that time. And so we were out, solidly fundraising. But in August, first week of August, we got that call that they'd looked at 70 different companies, didn't find anybody else that they liked better. So they wanted to begin that conversation again. So it was first week of August, and we were closed just at the end of October.
Mm. Wow. So that's pretty quick.
Mm-hmm.
That's a pretty quick turnaround. And in terms of the experience, did you guys have like a legal team that came in? Did you have how did that whole process take place? Did you have a banker or iBanker come in?
Yeah, so there's a couple of things that worked, I think, to our advantage. We were in the middle of raising a Series A, and we got that phone call the day after we got a term sheet that we thought was better than we deserved. Uh, Literally, we had just received again a very little revenue. I think it was something like 10 million on 30 pre, like it was 10 on 28. Just great, clean terms, kind of everything effectively was pari passu with the previous rounds. Um, so that kind of put an anchor in for the rest of the conversation. Uh, our legal team we were working with was Labarge Weinstein out of Ottawa. Really friendly, very startup friendly team. And we had that conversation about should we bring in an iBanker or not? Because we're at a really good spot. Like our house, our back office was very clean. We had some really good anchors in terms of pricing and structure. We didn't feel like we needed to go and shop the market. So we didn't bring in an iBanker, but we did bring in more powerful, experienced legal counsel. Who could sometimes the larger office, the bigger resume just carries a little bit more clout in negotiations.
Mm-hmm.
So we brought in Latham Watkins out of Boston to help close the deal. And that helped out a lot. It gave us some really good strength in terms of negotiating on some of the loose ends. Um, but I think the real clincher wasn't legal counsel. It was the back channel conversations. So we had a board member who had a close relationship, a personal relationship with the CFO at NetSuite. And so that allowed us to kind of double end a couple of conversations. Like, here's the firm directive, here's some qualifying commentary. And I think without both of those, we would have ended up with a very different deal, if anything at all.
Wow. Wow, that's awesome. A board member had that back channel. That's fantastic. That's
And it was super important right down to the wire. Because, I mean, we had this fantastic term sheet as our investors really wanted us to continue. So finally, we got to the point as a founding team where we said, "Hey, we're gonna end up selling, and we need to try and close a bit of a gap, kind of on the valuation." And uh, the message that we got back from the NetSuite team was that it felt like we're jerking them around. Was that we weren't managing the process in good faith, and that personal relationship came in really crucial because we weren't, just very genuinely, we had these two options in front of us. And knowing that our board member could offer that very real commentary Whereas their iBanker on that side, great iBanker, but very abrasive in interactions. I don't think it would have come across without that back channel.
Nice. So looking back at the whole transaction, the kind of craziness, the ups and downs, for everybody that's listening out there, uh, what would you do differently if you could look back and say, like, okay, there's a couple things that may have gone better or may have gone worse. What could you share about, what you would do differently?
Um, so I was talking back. I had a lot of self doubt about the process. It's the first time I'd ever sold a company like this. Um, I think the two things I would tell myself is, number one, your gut reaction about judging the dynamic of the buying team is a good one. Double down on that. NetSuite is so much the company we were growing up to be. And when I talked to other founders, I realized how lucky we were with that. And so my gut instinct there was good. But I think the second thing I tell myself is, in all honesty, to get a counselor early on, because the work with that iBanker on the buying side, that great at his job, but it felt like an abusive relationship in retrospect. It was a very tough dynamic, and I know my personal struggles with just managing that process was tough. And I think if I'd done a better job of kind of protecting my own mental health during that, I would have had a personally healthier and smoother process going through that sale.
Got it. And
Yeah.
it's a great segue into the finale question because you kind of touched on telling yourself things. But knowing what you know now, what would you tell yourself, just high level, business in general, 10 years ago?
The big thing I'd say is, especially in the acquisition side, an investment banker's job is kind of almost to be a professional jerk.
Hmm.
Like, their job is to whittle down the price. It is not personal. As long as the conversation keeps going, you're winning. It's okay if they're calling you at odd hours, if they're slamming the phone down, if they're calling you names. It's not you, it's the process. Keep the conversation going.
Well said. Well said. So, what are you working on now?
So, that idea of helping people have very fulfilled work-life experiences is really the trigger for Uvaro. We run a boot camp of sorts. We help people in other industries land amazing sales roles at tech companies, and it has been so exciting. We've seen people leave, roles in fast food, or they were bartenders and then the lockdown cost them their job, or they were selling advertising or cars, just having worlds of success and joy joining tech companies coming out of our program. And so it's fun. We get to change lives every day.
Nice. Nice. Yeah, I love the focus on career changes and having done a program like that myself, I'm super passionate about that educational kind of middle ground, helping show people that it's okay, no matter what stage you're at in your life, it's fine to do something different. And especially
Mhm.
now more than ever, I could see that being very, very important after the pandemic and everything. But where can people go and learn more?
You can always hit us up at Uvaro, Uvaro.com. And I'm on most social: Instagram, Facebook, LinkedIn, all at Joseph Fung. And always love connecting with other entrepreneurs and founders. So hit me up.
Awesome. Awesome. Well, thank you so much for coming on the show today and sharing your story.
Thanks, Steve. My pleasure. We'll chat soon.